All right, so let's talk about the estimates right now. Estimate of 170,000 jobs, much lower than the month before. In your mind, if this comes in line or even slightly higher, what does that mean?
The Fed is hoping that their high interest rates is finally going to slow the economy and tame inflation. But as the labor market gets stronger and stronger, and every time we get a new data released, everyone's surprised on the upside. People are starting to doubt whether the high interest rates put in by the Fed are really capping inflation or not, because the labor market is so strong and is feeding consumption to continue very strongly.
All right, so estimates are lower for this month from the year before. We're also seeing a trend when it comes to continuing jobless claims. We're on a multi-week streak of continuous jobless claims that you sent in some research to us about. What does that tell you about the job market and what to expect from this report coming up again at 8:30 a.m. Eastern?
It shows you the job market really continues very strong. And one of the things that's feeding consumption and keeping that strong is the fact that people are very secure about their income. The consumer sentiment right now is the belief is that jobs are plentiful. We see a lot of union settlements that are really fairly large. And people are very confident that they can have income to support the consumption. And that's the last thing the Fed wants to see, because the Fed really wants the consumer to slow down in their consuming, because that's one of the forces driving GDP growth and inflation.
All right, we've had some major labor actions over the last few weeks, few months. Of course, the auto worker strike. So according to the Bureau of Labor Statistics, we had 48,000 workers on strike in October. At the same time, we saw 37,000 layoffs. That's according to Challenger, Gray, and Christmas. Talk to us about those two forces there, and what are we going to see in the jobs report? Are we going to see anything that reflects these different moves?
That's a great point, Frank. In fact, that's the inside baseball discussion among pros right now. The number may come in soft in October in terms of payrolls, because the strike activity is really holding down the numbers. And in fact, the numbers may be a lot stronger than what we're going to be seeing. And if that's the case, the Fed is going to have to stop being on hold and continue to raise interest rates. Right now, the Fed's credibility on their ability to really say that we're going to really raise rates if the economy warrants, that the bond market just doesn't believe that, because no one believes that the Fed's going to be raising rates anymore. And that even, again, works against the Fed, because that raises consumer expectations and inflation expectations.
Bill, that's why we love to have you on. You're wrapping this all up in a bow. If we do see in line or better than expected jobs report, how do you see that impacting the stock market and, of course, as you mentioned, the bond market?
Well, right now, everyone, including the bond market and stock market investors, are hoping that the Fed is right, that they will be able to control inflation. Once these numbers come in and it comes in at, say, below 170, everyone's going to cheer and you're going to see a positive reaction in the stock market. But if we see an overshoot again, watch out, because all bets are off.